from Lilu's investment in Lukoil, a deep dive into a value play. Part 7. Information Asymmetry. What Lilu knew that others missed. Let's be clear about something up front. The edge here isn't secret information. It's interpretation. Lilu didn't have access to some hidden document or inside tip. The reserves were public. Oil prices were public. The voucher system was visible to anyone who bothered to look. Everything that mattered was technically knowable. What was missing wasn't information. It was synthesis. Most people in that market weren't even asking the same questions. The local sellers, ordinary Russian citizens, weren't thinking in dollars per barrel. They were thinking in meals per week, inflation per month, how to get through Friday. To them, a voucher wasn't an abstract claim on future cash flows. It was a confusing piece of paper in a collapsing economy. On the other side, Western investors were asking a completely different set of questions. Is there rule of law? Is custody clean? Are the financials audited? Is management incentivized correctly? All reasonable questions. All irrelevant at this price. Lilu stripped it down to one narrow, brutal question. Is the price so wrong that the risks don't matter? And the answer was yes. This is where real information asymmetry lives. Not in hidden facts, but in the willingness to reason differently. Lilu understood that the sellers didn't know what they owned, not because they were stupid, but because ownership itself was new. Abstract, untested. They had no lived experience with equity as a claim on future production, so they undervalued it. At the same time, Western investors overvalued their own checklists. They mistook uncertainty for uninvestability. They demanded standards that only exist in mature systems, and by doing so, they excluded themselves from the only environments where prices can become truly absurd. Lilu sat in between. He didn't need perfect information. He needed enough. Enough to know the reserves were real. Enough to know oil clears globally. Enough to know panic doesn't last forever. That's it. He wasn't trying to solve Russia. He was solving one imbalance: forced sellers meeting absent buyers. And here's the subtle asymmetry most people miss. The locals were price takers. The institutions were spectators. That left a vacuum. And in that vacuum, a small determined buyer who understood asset value could set the terms. That's why the opportunity existed at all. If Russian citizens had time, education, and stability, vouchers wouldn't have traded at these prices. If Western capital could move freely and safely, prices wouldn't have stayed this low. But neither was true. So price detached from value. Lilu also understood history. He'd seen what happens after wars, revolutions, and collapses. Not everything survives, but productive assets usually do. Especially assets the rest of the world needs. Oil doesn't care who governs Moscow. So what Lilu knew wasn't a secret. He knew panic creates bad prices. He knew forced sellers distort markets. He knew assets outlast regimes. He knew time corrects extreme dislocations. Most people understand these ideas intellectually. Very few are willing to act on them when the environment feels completely uninvestable. That's the asymmetry. Not better data, better nerve, better framing, and the discipline to trust arithmetic over consensus. And in markets like this, that's enough to change your life. Now, here's the real test of the thesis. And it didn't come during the boom. It came during the bust. In August 1998, Russia defaulted on its domestic debt and devalued the ruble. The currency lost more than 70% of its value in weeks. The stock market collapsed. From peak to trough, equities fell around 90%. By conventional wisdom, that kind of collapse should wipe out foreign investors. But Lilu pointed out something most people missed. Entry price matters more than headlines. He explained it simply. If you bought something at 10 cents that was worth $0.005% of intrinsic value, even a 90% currency collapse doesn't kill you. You still come out ahead. In fact, you might still be up 10 times your money. Think about the math. You buy at 1 cent on the dollar. The price explodes during the boom. Then it crashes 80%. You're still massively ahead. That's not luck. That's structure. The initial undervaluation was so extreme that it absorbed macro catastrophe. And because oil is priced in dollars, Lukoil's revenues were effectively hard currency, while its costs, labor, electricity, were paid in devalued rubles. Long term, the devaluation actually improved the economics of Russian oil exporters, even if stock prices temporarily imploded. This is why Li Lu could sit through chaos while others panicked. He wasn't anchored to price, he was anchored to value. The trade also revealed deeper lessons. The highest alpha often lives in places institutions refuse to touch. Markets labeled uninvestable are precisely where reputational and custodial risk get mispriced relative to fundamental asset value. Liquidity, something investors claim to love, was the enemy of price discovery here. The friction, confusion, and illiquidity of the voucher system were the reason prices got so stupid in the first place. And philosophically, this investment marked Li Lu's transition. It was his pure Benjamin Graham phase buying assets purely because they were cheap. But Lukoil wasn't just cheap, it was good. Real reserves, real production, real scale. That realization likely shaped his later evolution toward owning quality businesses with long runways, not just statistical bargains. At the deepest level, this trade shows what real information asymmetry looks like in transitional markets. It's not spreadsheets, it's behavior. It's watching who's selling, why they're selling, and who isn't allowed or willing to buy. Li Lu wasn't betting on Russia stabilizing. He was exploiting a temporary breakdown between price and reality. And that's the enduring lesson. True margin of safety doesn't come from calm environments. It comes from buying something real at a price so low that even disaster can't break the math. This is Avi. Like and subscribe. On to the next.